Hello, welcome from Trend Signal for our review of the data and events of the week beginning the 22nd of August. Well, the month rolls on. August tends to attract market angst, but so far, I say so far, the 22nd, we've still got a week and a half to go, there have been very few ripples really, with very little to report or much to stir things up. This week, especially when we look at the calendar, it's a fairly lightish calendar. I normally just look at the high impact bits of data, but in fact there are so few that we're also just referring to the medium impact ones to get a bit of further color on what might be happening this week. Market focus this week, well, the dollar, they had a bit of a slump post FOMC news midweek last week and recovered into Friday. And also oil, obviously, another big move last week. And US indices, we've seen what's happened to the European indices, probably certainly the likes of the Eurozone ones with a stronger euro, not particularly happy with those particular events that caused the DAX to come off about 170 points last week. And the Nikkei also slumped about 370 points because of a stronger yen, although some of those yen gains were reversed Monday morning, but nothing of any great magnitude, to be honest. The dollar, as I said, is continuing its recovery from Friday, although it's not recovered all of its losses. It got a bit of a drubbing midweek as the FOMC published, I think, slightly surprising dovish minutes regarding the possible timing of interest rate rises this year. It certainly looks like September is very unlikely now, and more likely in December, although the probabilities are still below 40%, which is far from a certainty. A possibility rather than a probability, I would say. Other than that, last week, commodities, gold, slightly higher, up a couple of bucks on the back of a weaker dollar, I'd say. Oil had a very big move. UK oil, or Brent crude as it's called, up $3.66, so that's what, 7.7%, something like that. And US oil even more, $3.85, 8.6% higher. So quite a move. I guess helped by the dollar, of course, being a dollar-based commodity, but expectations regarding a freeze on any OPEC production increase has really helped that move. So data and events this week. Did we got to get too excited, as I say, about the calendar with little key data out? The first thing is obviously clear. There's very little actually coming out on Monday. Tuesday sees the Eurozone PMIs being released. That's for manufacturing and service sectors. As you can see from the calendar here, the consensus is pretty much unchanged. Just slight uptick from last month. They break it down here on Forex Factory for the German and French ones, the key ones in Europe, and then they give an overall figure at 9 o'clock tomorrow morning. Flash manufacturing PMI and services PMIs are slightly higher by just 0.1 of a point. Anything above 50, though, is expanding, so the numbers remain reasonably positive for now, at least. And then on Wednesday, as we always have actually, the EIA released the stocks for crude oil, it's referred to as the crude oil inventories. That really attracts the usual attention, of course, especially following last week's 8% rally, which, as I said, was sparked by hope that OPEC production would be pegged at current levels. I think it was given a kick at the beginning of last week when with the rumors of talks of an informal OPEC meeting next month. My own view is that it's really doomed to disappoint, in my opinion, although a lot of traders are skeptical. Maybe we'll be surprised. Of course, oil's rally back from $40 now puts it back into a bull market, so all those that were convinced we're in a bear market again has been sadly disappointed with that. In fact, we've had some extraordinary swings. So we've moved from mid-June at $50 down to $40 and then back up to 50, pretty much in the space of 10 weeks, which is quite a move. Thursday sees the release of the German IFO business climate, which is a very broad-based survey looking at wholesalers, retailers, builders, manufacturers in general, and it really sort of encapsulates business sentiment, really. Number was fairly positive last month. We're looking for a slight uptick to 108.5 this month. We had a good ZEW last week, so it's possible that we could see this EFO business climate number even better than 108.5 on Thursday morning. Other than that, we have durable goods expecting a rebound from the negative 0.4% print the previous month to a plus 0.4% print this month. We have, in fact, there are two numbers, the core and the regular number. It's the core durable goods that we need, which excludes the more volatile food components. And then we also have the start of this Jackson Hole Symposium on Thursday. This is sort of the main event of the week, really. In fact, the main event of the Jackson Hole meeting, or symposium as it's called, really is on Friday. But this meeting is a curiously named meeting, but it actually is a meeting of policymakers and economists, and it's actually called Jackson Hole because it's in an inaccessible valley, apparently, at least what I've been advised. So it's not quite as weird a name as you might think. Anyway, Jackson Hole meeting goes on for a couple of days. Janet Yellen will be addressing the gathering on Friday, so that's the day that we'll be concentrating on. And despite the rather technical nature of her address, she may well give further clues as to the path and maybe timing of the next interest rate rise. So Jackson Hole Symposium, probably the key event when Yellen speaks on Friday. Other than that, we've got a couple of updates for GDP from the UK and the US. First one is the UK on Friday. The second estimate, a bit obvious really, it's the second reading of the gross domestic product for the second quarter Q2. When they've released the first estimate, it's only based on 40% of the data, so it's quite a job to collate all the data. 0.6% is the unchanged reading from the initial reading. No reason to suggest that will be other than that. Rather curiously, the US then have their prelim GDP, which actually is an update to their advanced data. So using the word prelim is thoroughly confusing in my opinion. But we're looking for a figure of 1.1% of the consensus, slightly down from the initial advanced reading of 1.2%. And that's it pretty much for the week. A quietish week for data and events, and especially in the month of August. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.